Welcome back to Elements in Focus. I'm Grant Sullivan, Manager of Advisor Operations, and with me, Aaron Rheaume, Director of Financial Planning. Aaron, my brother, how are you today?
I am very well, Grant. Another nice morning here in Indiana, and really looking forward to some warm weather that's moving in here. So, how are you, sir?
The same. I needed some sunshine and some warmth, that's for sure. Let's hope it stays. So, speaking of staying, look at that cheesy, cheesy roll into the topic. We're going to talk about staying power in a bear market as we cover your investment playbook today and our critical elements. Folks, if you're new to Elements in Focus, Aaron and I do our best to break down our five critical elements and kind of give you nuggets of information to chew on to help you guys maintain financial success long term. Why do we call these the five critical elements? Well, we believe that success is not dependent on one single factor, but failure can be. And what we found as an organization, as a team, that these are the five areas that we find where if there's a single point of failure, can wreck the entire financial plan. And so, investment playbook today is a big one. This is where a lot of people get sea legs or weak legs. And again, it's important to talk about. We're in the environment right now. What to do to ensure or provide yourself staying power in a bear market. Um, Now, we understand that bear markets come and go. They're part of the cycle of investing. And unfortunately, Aaron, people believe that we can just, in these times, know it's coming, move to cash, and then invest back in the market when the time's good. But you and I both know after all the years of doing this, that is nearly impossible. No one has a crystal ball. So, Aaron, when we talk about staying power in a bear market, what do we mean? What are we looking to accomplish?
From my perspective, Grant, it's really just staying the course and continuing on your unique financial journey, right? And that's different for everybody. Some people's needs are different than mine, that are different than yours. But you really have to continue and plan for that long-term course of action. And as you mentioned, markets do go up, they do go down. Historically, over time, the market's higher than what it was 20 years ago versus 50 today. And so, long term, we know that investing is the correct path. The pain is what you're feeling today when you're looking at balances and statements that are actually in the red. And it is painful from a behavioral standpoint. You don't want to see that account balance go down. We have to talk people through a plan and process a lot, and you have to stay the course. And so, what we tell people, or what I tell people, is really just figure out, timelines for your money. So if you're in the distribution phase, maybe you have a portion of your assets that are a little more conservative, like in cash for a year or two's worth of income needs. And then something long term that you have, that's a little bit more aggressively invested for 5 to 10 years down the road. And then something long term, over 10 years. And so it's really breaking down your overall asset mix, looking at your standard of living. Some people's standard of living, Grant, is met by their income sources like Social Security, rental income, pension income, and so that their assets can weather the storm because their standard of living is being covered by income streams. Others don't have that luxury, so you have to come up with a more diligent plan to say, okay, are we still on course? Do we need to do a course correction? And what are some things that we may or may not need to do to make adjustments to the portfolio? But long term, you have to be focused on the journey. As markets do go up and they do go down, the staying power is really just sticking to your plan of action.
No, it's huge, Aaron. And I want to echo two things in that another element, and that is just because your neighbor or what they're telling you on the news is frightening, that doesn't mean that you're in the exact same situation. And so, to Aaron's point, know what process you're using in your investment philosophy. Know what it's designed to do and how it's designed to work in these types of markets. So, for example, the families that we serve, Aaron, we use the risk barometer, which is again a process that our allocation team has created to weather storms just like this. Now, we're never going to
Mm-hmm.
guarantee our family's going to have positive returns in every market scenario. No, that's impossible to promise. And in fact, I don't think anyone can even do so. But staying power from our asset allocation team's perspective is managing your downside risk. So for those of the families that we take care of, that's third page of your portfolio assessment where you see, hey, when the market's heading this direction, are we following it in tow? Are we able to separate ourselves from that loss and that pain? And again, that's called winning the game. That's the staying power. It's not to get caught in greed when the market's going up, and it's not to make silly decisions out of fear when the market's going down. It's navigating both and understanding that in
Mm-hmm.
times like we're in right now, having a process in place that can get you out of fixed income when it's a dog, that can transition your portfolio from growth to value and do all these types of things, understanding that process and how it triggers and what you're looking for is going to be the key to your success. And for those families that are with FEG, our allocation team's already doing that on your behalf. Again, we're not going to be able to have the money grow positively in every scenario, but it's our job to ensure that when the pain arrives, we stem as much of the bleeding as possible to make sure you have staying power long term. Because by doing little things and making critical decisions when we're afraid, when fear is striking, can lead to serious failure long term. And again, it doesn't make a lot of sense. And sometimes it's hard to hear when you're looking at your balances and you're seeing smaller numbers. Just remember, this is part of investing, and you have to put a process in place you can trust. And if you have questions, please reach out to your your advisory team here at FEG. You can call us at 800-928-4001, or you can reach us at our emails. If you're new to Financial Enhancement Group and you want to set up a complimentary next steps meeting to review your whole situation and make sure you're heading in the right direction, even during these hard times, please reach out to us. Brittany will be on the other line to set you up with an advisor in your area. And there's a lot of content that we produced over the years, including and through some of these environments you can find on our website, yourlifeafterwork.com. And if you're interested in digesting more content, there are a lot of radio shows and other pieces of content we produced over the years, and they can be found on any of the podcasting services near you, as well as we're on all the radio shows that you can see below from WIBC to WILO throughout the week. Thank you again for your time. We know this is really scary, and please reach out to your advisory team if you have questions. And again, thank you for spending time with us this morning. We look forward to seeing you on the next one.